This is exactly what I would do if I have to start all over again. Before getting my shit right together, I literally have to create a business mindset, a systematic business approach that changed everything. Before that, I was trying to corner the system, but trust me, bro, it doesn't work. You're just gonna end up wasting your time and you're gonna lose your money. In this video, if you are serious and watch everything and apply it exactly like I said, you are guaranteed to perform better in the next 6 to 1 year, because I'm going to give you the complete foundation that I wish I had when I just started. Not just the technical concept, but the systematic education that creates profitable trader. Basically treating it like a business. You are setting yourself rules, giving yourself orders, boundaries not to cross and break. This might be for unprofitable trader that are advanced, but at the same time it's also useful for the beginners, which are my main focus. We will be covering from the basics: what is technical analysis, what is fundamental analysis, what is trading, what is forex, how the market works, the terminology we use, the tools you need, MetaTrader 5, how to trade, place your first trade, trading view setup, candlestick anatomy, highs and lows, support and resistance, breakout structure, change of character, liquidity concept, risk management, journaling system, and most importantly, the psychology transformation that separates winners from losers. Be over hours of series of trading education. We will briefly talk about every other topic I mentioned earlier and then detail them into subtitles, which I call the ABCD, the alphabet of trading. So basically learning the alphabet of trading and then later on know how to put them all together to be able to speak the trading language. I've had so many people want me to put them on into forex trading and literally have no idea where to start from. I think this is the right video. And also, for those of you that are still struggling with profitability, looking for an actual solidified process, a step-by-step guide to get your shit together, this is going to be hours of series of videos. I'm going to give you literally everything that you could possibly need, from the patience, from the focus to what you should focus on, from the risk management, the journaling system, to even what I call the market sentiment and market psychology. I'm going to run you through your journey: 1 month, 2 months, 3 months, 6 months, couple of years, who knows. What are the main problem of people that initially get into trading? What makes them fail? What makes the people succeed? The people that are going to take time, watch this video, take notes, they're going to get a lot out of it. So get ready, strap in, let's get to it. Trading is nothing more than a game of discipline probability, right? It's just like people comparing trading to gambling. Trading can also be gambling, depending on how you see it. That's not what we want to do here. That's why I said earlier, we want to treat it like a business. Number two is to be able to stick to a plan that I will give you without deviation long term. That's basically for long term success. I give you guys a plan and then we stick to it without deviation. If you are coming into the market for you just to make money, not learn, not improve, not stick to your plan, you're not gonna win, because there is no other way to it. For you as a trader, you definitely need to learn, you definitely need to improve for you to be able to make money long term. So putting money at first is not any of our priority now. It's the last thing to do. Our main priority is to build good habits. You might be lucky if you jump into the market quick and try to just make money and you just have mindset of making money. You definitely make a bunch of money quick, but it will not last. The market will definitely take it back. Now I'm going to give you everything you need for you to be successful. So you just have to take it serious and take everything I say, and then that's all. So see you in the next part. I search on DeepSeek the 5 stages of trading mastery. Number 1 here, we have the novice, the beginner stage. I don't know what I don't know. Basically, at this level, you still have this whole idea of you are definitely at this level now. If you just want to get into trading now and you have no idea about trading. So if you're watching this video right now, you've never traded before, you don't know what trading is, so you are still at this, which is the beginner stage. You don't know what you don't know, you have no idea about trading. Number 2 is the apprentice. He's basically the frustrated learner. You are frustrated by the market. So basically at the first stage, that's definitely where you end up blowing your first account. I know what I don't know. At this stage, you start to realize how hard the market is, how hard it is to make money. You literally, you've definitely gone past the whole idea of buying a Lambo, those things. Stage 3 is the competent trader, basically the mechanistic executor. I know what I don't know. At this stage, you definitely start to know that you need to what you start to be doing, you need more experience, you need more knowledge, you need to apply some strict information to be able to get to where you are. And then the fourth stage is the proficient trader, the strategic adapter. I know what I know. I know what I know basically, which is where this stage is where you start becoming a more of a trader. You start seeing yourself as a professional trader because of basic all the things you've gone through, what the things you discovered, strategy wise, risk management, psychology, all those things. You start like putting all those things together. The last stage here we have the master, which is the Zen trader. That's where we are all trying to get, which is like trading becomes a second nature. You don't really put too much stress and you just do everything on automation. So let's dive into the first stage, which is the novice. Here we have the mindset the beginner trader usually have, which is I just need to find out the right strategy indicator and then I will get rich. And also they are usually looking for the holy grail. They have this high excitement and unrealistic expectations. Basically, if you're watching this video right now, that's exactly what you're going through. You have this unrealistic expectation about trading. You want to get rich, you want to make it, you want to make big money, you want to buy Lambo, all those kind of things. But it's real, you can make those things happen, but you really need to put in the work. So the whole first focus, searching for a holy grail, as I said. They also consume a vast amount of information left and there, jumping from one strategy to another. And there was the trading they have like reactive, um and then they are reactive and they are also inconsistent. They have no defined rules because they're still beginners. It's understandable. And they jump from one method to another. Risk management, they really don't know what is real risk management. Definitely have no idea of what risk management is, what is psychology. They definitely have no idea about trading. And they also think trading is easy money, all those kind of things. They also have this whole overconfidence after some wins. Maybe they open a trade and then he went straight to profit and they close and they made money. They are like believe that they're gonna make it quick, like they are doing something good. And even if you're conversing with them as a professional trader, they might even tell you that, bro, I just made money today. That's not really what it is. Usually the timeline for this, to personally from my own from my side of view, from my own view, I think it takes like maybe 1 to 3 months for you to be able to figure that like, bro, this is not really what it is. So the reality check, this stage ends with your first blown account. When you blow your first account, maybe you've made money 1 2 3 and then you lose it to just one trade. Maybe you made money with 10 trades and then one trade just take everything out. Like that's the reality check can like really like kick in. So the second stage here is the apprentice stage. The apprentice stage, the mindset here is basically they are still like the frustrated learner. The mindset here is this is harder than it looks like. Reality setting, frustration, confusion, and self-doubt are common. This is where most give up. They also have the focus here, start to recognize the importance of the system. They start telling themselves like, I actually need to put on a system for me to figure this thing out together. But even though if they put the system on, they're definitely not gonna follow it because they're still like no have no idea about what trading is really. So the risk management, the psychology begins. They start accepting what is psychology. They start accepting and considering what is risk management. They start considering what is journaling as well, those kind of things. The trading has a basic set of rules but struggle with consistency. Can I define setup? So this stage is where you realize how much you really don't know, that you need more information, you need more knowledge, you need to acquire more information, maybe pay for a mentorship, maybe this stage also. I think this stage where is where most of people actually go for signals as well. You start looking for signals. I do send signals for free, which I consider it might be helpful for some people if you follow exactly my setup. But most of the people that fail with signals as well, they really don't take the signals seriously. They really don't do exactly what the signals are doing. So even at this stage, you can still fail with signals. They still have this emotional roller coaster going on. And they start understanding risk management little bit by bit, because after they've taken more, they've blown their account with just one trade and made small little profits with a lot of trades, they start realizing and accepting risk management. So the timeline for this, I think it takes like close to around 6 months to 1 year. The truth here is that this is where most of people will quit. They will definitely quit trading and like the like just run away from trading. And personally, I believe you should at this, if you find yourself at this stage, and you want to quit, it's better you quit at this stage and don't go further to the third and fourth. Because if you quit at this stage, you are good to go. You can just go and then you lose your maybe your little $500 and then you just run away and never come back to trading. That's the best thing to me personally. So the third stage here is the competent trader, the mechanistic executor. Basically, the mindset here is that my edge is in my process. So they have this confidence go. The confidence goes from following a plan, not just from winning. Accept trading on as a business of probabilities. That's where you start maybe putting a step in. That's not even all. To me, I believe that at some point, even at this level, you can still even find yourself like going back a little bit, But this is a good progress, by the way, if you find yourself with this at this stage of the competent trader. So the process oriented has a clearly defined back tested trading plan, entry, exit, risk rules, review trade systematically. That's perfect, you know, and they execute their plan consistently. Performance becomes more stable, but can be rigid, may struggle with adapting to changing market conditions. That's very important. The market is not the same. The market changes all the time, based on geopolitical informations going around there. Donald Trump, anything can just make the market start changing. It's not the same. The way the market is moving in a certain period is not usually the same. It moves in on that period. And every quarter of the year has a way of influencing the market as well. So those are things that like the competent trader will start learning again. It's no longer about just your strategy, but there are some little things, That's where maybe at this stage you have no idea about certainty. Maybe next stage you're gonna figure out like the market is not really certain now. So they are consistent with their strategy execution. Definitely, they apply proper risk management. They follow their rule and just do things exactly as it is. Their emotion at this level will definitely be more under control. The timeline for you to reach this level, it takes like 1 to 3 years, really. And that's where you actually start taking trading seriously. 1 to 3 years, when you are reaching that third year of not really making money and then you are figuring your shit out, boy, you definitely need to be at that stage. The fourth stage here is the proficient trader, which is the strategic adapter. This level is basically the one that like upgraded, from the third level, which you have your mindset that flows normally. You understand the market's condition now. As I said, you know that market is not the same. The market is not certain, and you definitely ask for what is your setup, what is the market doing. Those are the questions you start asking, not just applying your setup blindly, that kind of way. Even though we're gonna be applying our setup blindly, kind of focus here, the market context, nuances, and reading the top, actively manages trade, example, trailing stops, scaling, begins to see trading as an art informed by science. That's actually very important. You need to start trailing your stops. That's something that maybe at the third stage, you don't do that. You want to do TP, SL, that kind of thing. You have a TP that you just want to leave it to your TP. But this stage, you can still say, let me just no, I don't want to lose. I don't want to see profit and see loss later. I don't want to see profit and see break even. Those kind of things start getting in as well. So the trading here, the flexible with their framework, can distinguish between high probability and low probability setups for their strategy, adjust aggression based on market regime and the trending and ranging volatile, risk management dynamic, may adjust position size based on conviction. I think I'm at this stage. I believe I'm at this fourth stage, this one of uh this fourth stage, I believe, and I'm looking forward to get to the master stage, kind of, I'm in between this stage to the master stage. Like I'm one step to the master stage, and I usually come back to the fourth stage. So basically, that's it. The risk management is dynamic, may adjust position size based on conviction of market volatility and smaller size in choppy market. Exactly. I think I'm at this stage, definitely. So this stage is the one that in between. The time frame is in between 3 to 5 years, which makes sense. And only 1 to 5% of traders reach this stage. And if you reach this stage, you are good to go. You are definitely good to go. Because you definitely be able to recognize patterns. Your executions are perfect without execution. Like you execute without hesitation, basically, and emotional neutral. You have no emotions out there. Risk management is automatic. I know what to risk already. Don't. I know what to risk in this particular market condition. I know what to risk in this particular market condition. You feel me? So, and trading becomes boring, and that's the main reason why I'm moving here doing this video, because it's boring. I have nothing else to do. I wait for my setup. If there is nothing to going on, I don't know what to do. So I'm here using my other time to shoot video, put informations out there, share informations, and that's all. I guess I'm very sure I'm at this level, and I'm figuring my way out to the master level. Sometimes I believe I'm at the master level, but reading this now, I think I'm at this stage. So the master level here is the Zen trader mindset, effortlessly effortless execution. You don't think too much. You just execute without stress. It doesn't take anything. Trading is an expression of self-discipline and understanding, not a struggle. Complete acceptance of risk and outcome. The focus here, the game itself, not the money. Masters often talk about self-awareness, mindfulness, and the philosophy of uncertainty. They have mastered themselves. Yeah, I think I've not really reached this level. I'm in between the fourth to this. So the trading here, we have the intuitive, the patient, and the high selective. Can sit for days without a trade, then pounce with size. Then I think so. Yeah, for instance, now this is a Thursday, and my first trade is today. So maybe risk management, perfect, I guess. The key challenge here is avoiding complacency, staying humble, and managing life outside of trading, which is very difficult to do. After a losing day, you need to be able not to mix your trading life with your personal life, kind of. So that's something that is very important. After hitting take profit too, you need to be that kind of person that it should not be noticeable that you just made money. You need to be that person that it doesn't have to be noticeable that you just lose money. You lost money. So that's something that, like, 100% everyone is looking forward to get to that level, which is where we are gonna be going through, or where I'll be taking you guys through, or where I'll be taking myself through. So let's see. Building screen time. Literally, there's no way around this. This is non-negotiable. You literally need to spend a lot of time in front of your chart. You need to understand the market, how it moves. So the 10,000 hour reality we have here, and then this time, the screen time requirement, minimum of 2 to 4 hours daily chart time. Personally, I believe you will need to spend more, depending on how available you are. If not, 2 to 4 hours a day is already okay for you to build that screen time. But if you can spend even more than that, you need to, because even after I've given you guys the complete foundation, you still need to put your shit together. And for you to be able to do that, you need to understand how the market moves. You need to get familiar with the market. And the only way for you to do that is spend time in that chart, to spend time building screen time. So there is no other way around it. We also have the recommended 100 plus hours before going live, which is something I would definitely go with as well. Demo trading, paper trading, as you all know, you need to just use that first before putting your real money at stake. Focus area, watch price action without trading. So yeah, you can observe. That's very important. You really need to observe and screenshot every setup, win or loss. That's basically at the same time taking a step forward towards journaling, and review 100 plus example of your setups, taking a step forward towards back testing and journaling as well. So study market behavior or key time. So that's also getting familiar with the market. There are certain things that you will discover on your own by observing the market, by spending time, by also like getting familiar with how the market moves, each sessions, what to do this time, what to do this time, what not to do this time, those kind of stuff. So fast track tip: record and replay trading session. at twice speed, just for you to be able to speed up things, you know. We have the pattern recognition process as well, from seeing to knowing. So visual chart flow and process. We have observation, seeing pattern 100 times. We have recognition, identify in real time. So basically, you need to be able to identify a pattern in real time, not when it has happened, not after, you know. So the anticipation, predict before it forms. Basically, what I just said now, almost same thing. You need to be able to anticipate the market's movement before it forms. So that's where the real stuff is. For instance, now you using a setup and then it's telling you if you keep going up, you should anticipate where it's likely for it to continue going up, like what we call trend line, which we'll get into in the next series to come. Execution, enter without hesitation. Definitely, you need to be able to execute your setup properly. When market comes to your price, you don't think twice. You just put on your trade, buy or sell. Yeah. Management, handle all scenarios. So you need to be able to get familiar with either execution, anticipation, and recognition and observation, every other thing. So the moment you start spending more time in this with in the charts, you get to get familiar with things and handle all of them, because so many things happen at the same time when you're in the charts and when you're trading. So many things are happening at the same time, so you should be able to manage everything going on and separate the noises out of what you should do, basically. Then the practice method, we have like 20 historical example daily and then 10 live market observation. Here we have the emotional control journey, which is very crucial. You know, you should be able to know the psychology timeline and some things that happens as we detailed the stages of trading mastery as well. Here we also have the first to 3 months, as you all that are watching now, you know, you have this whole idea of fear and greed that is really dominant, and revenge trading, or FOMO for entries, holding losses too long. You don't want to miss out on move. Market comes to a price and you setup is telling you should buy lower, and then based on how you feel about the move, and so you also it goes back to the beginner this thing stage, which is you're about making money and you do have no idea, you're lacking of knowledge and experience, so you just press buy at the top and instead of waiting, and fear of missing out, basically. And that lasts like 1 to 3 months, which you people should know now as a beginner, that you are at that stage and you should know what you should be going to at this stage, and don't go to it, or learn from it and know that you're at that stage. So basically, the fourth month, the 4 to 9 months, we have the awareness building as well, the emotional, they recognize emotional triggers and start using stop losses and beginning of discipline. So I think this part is when you start seeing people posting online, and then it gets to you. Maybe you see someone is buying, that you see that person is influential or one of all these trading gurus online buying. You want to buy it too instead of waiting for your personal setup. That's something. And you start using stop losses instead of the first stage. Beginning of discipline, maybe. Yeah. 10 months or 11 months, control developments, follow rule under pressure, accept losses calmly, and move on. You take it with your full chest and you just move on. You trust the process as well. From the 8 months plus, that's emotional mastery. Trading becomes mechanical, no emotional attachment, and consistent execution, basically. Now we're gonna be talking about 5 important parts that I really want you guys to take seriously, and also consider every other thing we spoke above, and like the stages we spoke about, the screen building time, every other thing we spoke about. I'm starting our course this way because these are the parts, as I said earlier, what makes people fail and what makes them fail. So we are going through things that makes people fail, and then what make people succeed as well. So the successful people in the trading industry, what made them succeed, and the one that failed, and basically, so these are very crucial information and knowledge I'm sharing right now. You people need to take notes. If you are really serious about getting your shit together and follow me with this journey, you need to get a notebook, take screenshot of all these things, and put them down, write them down, and follow up with it while you are growing and learning, because you're gonna be trading technique. When we start the real thing now in the charts, you will maybe skip this part because so many things will be happening. But now that you're aware of all these things, you need to be considering those and be moving along with it. So yeah, number one, we have an edge and stick to it. So the edge basically is trade one proven strategy, continue to focus on building conviction and confidence with it. And that's what we're going to be developing together. We're going to be having a strategy, and that's what we're going to be putting together. Every other thing has strategy, what to do, what not to do. Every other thing that we'll be putting together that will become a system that I call our system. That's what we call your edge. So you know that back testing within long period of time, I'm winning. So everything else in the market beside this one strategy is noise. So you just wait for your setup. You don't do any other thing. Market is buying. Your setup is not telling you should buy. You don't do anything. Market is selling. Your setup is telling you not to sell. You don't do anything. You just stay and stay chill, you know. Don't care about the market does outside of your setup. Yeah, what I just said. Continue to look up and watch for your strategy every day to build experience. So you need to check your strategy because you might miss out on it, and that's something that we need to avoid as well. For instance, now you are out of the market, you're waiting for your setup, you are too busy with something else, but kind of like come to the chart and check if your setup is presenting or is forming, so for you to be able to take it, because we don't want to miss out on our setup. All our setup, we want to make sure we take most of them, you know. So number two here, we have a one to go setup, which is something that we develop together and then we master it, and we try to trade less. And every day you come into the market, you should just wait for that, and you get out just that trade idea, and then you move on. And here, it tests your eye by paper trading to build conviction. So demo trading, again, you're not putting your money at stake at first. You need to be able to get everything right, and you need to be able to know what you're doing before you put your money down. Third is building good habits over making money. This is very, very important. This is where most of the people like really, really like fuck up. They really fail at this level, which is they are more focused on making money than building good habits. But the thing here is that good habit is what's gonna make us money. Money is not gonna build good habits. You see how I'm putting everything together. So here we have the good habits you build doing along your trading journey is really what is going to make you successful, which is exactly what I said. Successful is making you money, maybe. And in our case, focus on good risk management, only taking your setup, stepping away when needed, not over trading. That's very, very important as well. Stepping away when is needed. When you take a loss or three losses, your setup is telling you should stay away from the market. You should actually stay away from the markets, you know. So when you come into the market with the mindset of making money, you will make every mistake in the book. If you focus more on the outcome and not the process, you will never win to long term. That's that's just it, man. There is no way around it, bro. Like you really need to just focus on your habit and just keep repeating the same thing. Track yourself, and yeah, rewire your brain to get satisfaction from doing good thing and not just making money, because you can still come into the market and do the right thing. You can do the right thing and lose money, and do the wrong thing and make money. But we don't want to do that. We want to be doing the right thing to make money, and no want to be doing the wrong thing at all to make money out of it. Because once you start making money from doing the wrong thing, bro, you're building bad habits, and that bad habits over the long period, market is eventually going to take that money back, and very quick, you know, even taking more. So yeah, generally, like your life depends on it. We need to journal our system. You know, we need to literally like take it seriously, as I usually consider it as a business. The example I usually give is, which is treating it like a business. You come into your company, you're giving yourself rules, setting yourself boundaries not to cause, giving yourself orders, and sticking to just that and executing it. The thing here is hard for some people to do, because even at me as well, it's hard because you are the one opening your business yourself, and you're the one giving yourself orders. You're the one setting rules for yourself. So it's easier for you to breach those rules. But in this case, we want to force ourselves not to breach those rules. We want to force ourselves not to cross those boundaries. And if eventually you end up crossing or breaching those rules, like we all we end up doing as human, we have mistakes in us, you have to pay for that, So let me just keep quick to the building of discipline and emotional control. Trading is a game of you versus you. Yeah, that's true. You're fighting yourself, and building a radical habit of self accountability as well. Trading is a risk-based game when you start to focus on making money, losing money, failing, getting rich, and all those stuff. We must be observant of the market and no outside thoughts, no outside attention. This is also very good because sometimes you might be taking buys or you might be taking a trade, and then you're seeing one of your mentor or someone you're looking up to, or all these trading gurus out there on social media taking the opposite direction, and you just switch quick. No, but you might be even be the one trading the right setup right now, not those gurus you're seeing online. So their own setup is telling them they should sell. Your setup is telling you should buy. So just let them do themselves. So when we sit down to trade, you are nothing more than a monkey on a screen being told to press a button either by yourself. That's very fast. You just sit down. Your system is the one telling you either you should press buy or sell, and not any other person. So you react based on what the market is doing and not what you want to do. No sentimental trade at all, no bias, nothing at all. So that's how we gonna be ending this right here. And then, please, guys, if you're serious about everything I told you guys here, take notes. Consider this as very important informations. Put them down, and then see you in the next series, which I'm gonna be releasing soon. Bye, peace.